Welcome back to Only Stocks. Today we're diving into a potential catalyst that could impact the stock price of Ginkgo Bioworks. This cutting-edge biotech company just announced a major partnership with Novus International to develop innovative feed additives for animal agriculture. But what does this mean for investors? We'll break down the financial implications, explore why Ginkgo is expanding into Brazil, and discuss what stockholders should keep an eye on. By the end of this video, you'll have a clear understanding of whether Ginkgo Bioworks is a buy, hold, or sell after this news. If you're looking for timely stock insights and biotech trends, make sure to hit that like button. And don't forget to subscribe for regular updates. Let's dive in. At the center of this big news is Ginkgo Bioworks' new partnership with Novus International. Now, Ginkgo is no stranger to high-profile collaborations, but this one is particularly interesting for investors focused on the agriculture sector. Novus, a global leader in animal nutrition, is teaming up with Ginkgo to create cutting-edge feed additives that are designed to improve animal growth efficiency while reducing the environmental footprint of livestock farming. This partnership taps into the growing demand for more sustainable agriculture solutions. And that's where the potential stock impact comes in. As consumers become more focused on sustainability, companies that address these issues could see stock appreciation as market demand grows. For Ginkgo, this is a strategic move into an industry that represents a multi-billion-dollar market. But how will this translate to stock performance? So, why should investors care about Ginkgo's venture into animal agriculture? Well, the global demand for protein is skyrocketing. With the population expected to reach 10 billion by 2050, livestock farming is under pressure to produce more with less. That includes less land, less water, and fewer emissions. By improving feed efficiency with their bioengineered enzymes, Ginkgo and Novus are solving a pain point that could make livestock farming more cost-effective and sustainable. This could be a significant driver for Ginkgo's revenue growth. For investors, that means the partnership has the potential to open up a new revenue stream in a multi-billion-dollar sector, something that could be reflected in future earnings reports. This is definitely a space to watch if you're thinking about Ginkgo as a long-term play. Ginkgo Bioworks went public in 2021 via a SPAC merger, and it's been a wild ride for the stock since then. Despite the initial hype, Ginkgo's share price has seen some volatility as the company ramps up its operations and invests in new technologies. Recently, the stock has been trading sideways, which has left investors wondering what could trigger the next breakout. That's where partnerships like the one with Novus come in. If this collaboration leads to meaningful revenue growth or new product launches, it could act as a catalyst for the stock.
In an S1 are just that. Many of them don't actually happen, but you got to list them. Yep. Nonetheless, it's not often you see one that sort of talks about the potential for malevolent purposes from third parties who gain access to some of your engineered cell materials. How big a concern is that? Because it kind of sounds pretty scary.
Yeah, so I think there's two halves to this. So one is sort of like the software industry would have needed to deal with like piracy, because it's very easy to copy software. I think as you see more cell programs out in the world, you're going to need sort of legal structures to make sure people can't steal them and that sort of thing and pirate it. That's one half of it. And then the other is biosecurity. Yeah, I mean,
But investors should also note that Ginkgo is playing a long game. Biotech is known for its delayed payoffs, and it may take time before we see how this partnership translates to the company's bottom line. Next, let's zoom in on Ginkgo's expansion into Brazil. Just recently, Ginkgo announced a partnership with Vitalis, a Brazilian biologicals company. Now, Brazil is a major player in global agriculture, so expanding into this market makes a lot of strategic sense for Ginkgo. For investors, this move is crucial because it positions Ginkgo in one of the largest agricultural markets in the world. Brazil is known for its massive livestock farming industry, and Ginkgo's bioengineering solutions could help make Brazilian agriculture more sustainable and profitable. This partnership is not just about market expansion, it's about scale. Brazil offers Ginkgo an opportunity to test and scale its technologies in one of the most important agriculture hubs. If they succeed, this could lead to larger contracts and international growth, both of which are strong indicators for stock appreciation. Let's shift gears and talk about some recent insider activity that caught investors' attention. One of Ginkgo's executives recently sold over 10,000 shares of company stock, raising some concerns among shareholders. While insider sales don't always signal bad news, they often raise questions about the company's future performance. Is this a sign of doubts about Ginkgo's growth prospects, or is it just routine selling? Investors should keep an eye on this, especially with Ginkgo continuing to make big investments in its biotech platform. If you're a long-term investor, this may not be a red flag, but it's worth watching closely for any patterns in insider selling going forward. One of the key things to remember when analyzing Ginkgo is its long-term strategy. While the stock has seen some volatility, the company has a clear vision to lead the synthetic biology revolution. Their foundry platform is designed to scale across multiple industries, not just agriculture. For long-term investors, this broad approach means that Ginkgo isn't just a single-bet company. Whether it's in agriculture, pharmaceuticals, or industrial chemicals, Ginkgo has the potential to diversify its revenue streams. The question is, can they execute on this vision?
Right? And what that means is that we're constantly playing with DNA from the context of building new products, improving on existing products, and just working on cool science and cool microorganisms to help us as a community, the human community, live in symbiosis with the environment around us, right? So what Ginkgo essentially does is caters to different aspects of the market today. It could be food, it could be personal care, it could be textiles, dyes, pharmaceuticals. It could be commodity chemicals, it could be natural products, and wherever there is a need for a product to be made by a microorganism, where biology can make it easier, biology can make it safer, or biology could make it faster, right? So cheaper, faster, good quality, and safer.
If they can, Ginkgo could become a biotech leader over the next decade, and this partnership with Novus might just be the first step in that direction. For investors, patience may be key, but the upside could be significant. So, after all this, what's the verdict? Should you buy, hold, or sell Ginkgo stock? Well, it depends on your investment strategy. If you're a long-term believer in synthetic biology and willing to weather some volatility, Ginkgo could be a buy. Their partnerships with Novus and their global expansion into Brazil show that they're laying the groundwork for future growth. However, if you're looking for quick returns, Ginkgo might not be the best bet right now. The stock could experience more volatility as the company continues to invest heavily in R&D and expansion. What do you think? Are you bullish or bearish on Ginkgo Bioworks? Let me know in the comments below. And as always, don't forget to like, subscribe, and hit that notification bell for more stock insights and biotech updates.